Hello everyone and welcome back to my channel. As of every week, we will dive into the fundamental, sentiment, and technical analysis of different currency pairs. Now, previous week I was working on improving my fundamental and economic indicator analysis. And why is that? Because I wanted to rely on higher impact news and to have more opportunities to scalp and to take swing trades and to have more confidence and robust strategy that I can use. So, when I started, first I started with this economic indicator sheet, and based on it, I was seeing the strength of different currency pairs. Then I added economic strength, then I added sentiment tracker until I got into this stage. Then I added another cheat that I implement the weekly indicators that I like to see and what their impact will be on the markets. Then I added a small technical strategy for scalping and for different conditions, even if I'm trading on a higher time frame on the daily time frame. Now I upgraded it into another level. So now I have right here all the input data that I need. Hopefully it will be automated later on. Everything will be automated, but this is the data that I cultivate. These are the indicators that I look at, and I have two sheets that calculate the Forex forecast deviation analysis. So it's based on weights and different deviations, actual from the forecast or actual from the previous data. And based on it, I have the ranking system that will give me each currency which rank it has. Then I have a cross currency comparison. This sheet right here compares every single data with each other, and then it has weights to it. Then we have the total score, the ranking right here, and the deviation ranking, final ranking, and then the strength based on these two. Now, if I am scalping, I will have more weights on the forecast deviation analysis. So it will be like 70-30% weight. And if I am taking a swing trade, it will be 70-30 in the other direction. So there will be a huge compensation on cross currency comparison. So if I go from this currency analysis to this currency analysis, we can see that USD JPY is still strong, but right here the CHF is strong, here the CHF is weak. Australian dollar is strong right here, Australian dollar is the weakest in this data right here. So there is some nuances to it. I removed this factor because I will be adding another sheet for purely sentiment factor, and I want to see which indicators, which leading indicators are for the sentiment and not lagging indicators, because from a logical standpoint the COT data is a lagging indicator for the sentiment. Why? Because it comes on Friday and the people or the firms are already positioned on previous week. Maybe it might give hint because speculators or huge speculators put their position on monthly basis, so they divide their positions, but I'm still looking at it to see how I will be implementing the sentiment tracker into my analysis. So this is the final analysis for me. I'm very happy on where I got with my strategy. There is a person that is working on the AI implementation and automation implementation, and he's working very hard. I want to thank him for his input and hard work because he enlightened me to get this analysis into automation and not do it manually every single time. Now, from this final analysis, I've got USD CHF, very bullish currency, JPY CHF, USD New Zealand dollar, JPY New Zealand dollar, different currency pairs. Okay, let's look at two during this video. One will be USD CHF and the second one will be JPY CHF or CHF JPY. Let's start with USD CHF right here. Also, I added the moving averages and the RSI just for more confluence. But if we are in a bullish momentum, there is no way to take this overbought condition in the RSI as a selling position, even though we are overbought from technical perspective. I will wait for retracement and take a bullish scenario. And every time there is break of structure, I will wait for retracement into the averages and into the condition that the RSI is oversold on the daily or the 4-hour time frame. It depends based on the data that is coming. So if there is news coming during the day, I might go into the 4-hour time frame to see which area is a good area to buy from. Okay, now let's go to the daily time frame and start the technical analysis of this pair. First, right here, we dropped, we moved higher, so this is a new break of structure. So I have the fibs right here, and the 50% retracement is in this area. Also, we have a good support zone and a supply zone at the same time. So this is a good support zone, and also we have this, sorry, demand zone. So we have the support zone, demand zone, and the retracement. And if it needs like 2 to 3 days or even a week to retrace, the moving averages will catch up. So this is a great area to buy from, around 89,500. This is the technical analysis for USD CHF. Now let's jump into CHF JPY. Okay, just here like this. Okay. Now CHF JPY, I was already waiting for prices to reach this area in order for me to take a short position. First area I was looking to short is at this supply zone. We hit the supply zone. I did not take an entry, although it would have been a great entry. So my entry will be after 1 hour shift in market structure, which is this area. But I got greedy a little bit. I wanted for prices to retrace into the 74,500 in order for me to take a short position. I was putting a sell limit right here, limit order, and it did not get filled, and prices immediately started pushing lower. Why I wanted to take a trade from here? Because there was Swiss franc news And these news, as you can see, the scandal at 9 a.m. local time, so it was news for the Swiss franc. It came very negative for the Swiss franc, and market started pushing lower. This is the new scandal. I waited for some retracement and it did not retrace into the 500 and I missed it. So I could have entered in these areas, but because I was greedy, I did not enter and I lost the entry. If I entered, even right here at the break of structure on the 1 hour, stop loss around 100 pips, my open position would have been right now at 1 to 4 risk to reward ratio, which is a very good risk to reward ratio. And from a fundamental perspective, there is a huge opportunity for prices to keep going lower. Why? Because the Bank of Japan is looking to hike interest rate, and data is coming very powerfully for the Bank of Japan, which is helping him to for the currency to get stronger and stronger. And the Swiss franc is having an opposite idea, looking to cut interest rate into the 0% area, and data is coming negative. So this trade I would have held it for the whole year, even maybe year, 2 years. It would depend, but even if now I get some retracement into great areas, I will be looking to take short positions. For example, now trading technical analysis, because fundamentally I am bearish. We have this great area of supply zone right here and the moving averages. So if we retrace into these areas with the right economic uh, indicator, red folder economic indicator for the Japanese yen or for the Swiss franc, I will take a short position. Why? Because I will be holding it for around this area, so around the 150 area. So it will be a great risk to reward ratio. So it will be something like this. A very beautiful risk to reward ratio. It might take like 1, 2 years to play out, but fundamentals and data are supporting this trade. This is two ideas that I'm looking at, and also I'm looking a lot at JPY pairs, because it's been so long that the Japanese yen was very weak, very weak, very weak, and now the economy is picking up. And since they were in a stagnate uh, growth, if it pick up, it will run for like 2 years, 3 years, because their cycle is very long. Their GDP cycle, uh, they were held a lot in a recession. So now, if there is a boom, I think the central bank will not react as fast as they should react, because they would fear from coming back into stagnant inflation, uh, and this will help us as traders to get more opportunities coming into the next month, even quarters, and even years on the JPY pairs. Hopefully it was insightful for you. If you like this type of content, don't forget to hit the like button and subscribe for weekly analysis like this. Until next week, stay safe.